Welcome to our podcast on mastering dental accounting and profitability, your favorite 2025 dental playbook for financial success. So, most dentists graduate dental school without ever taking a single accounting course. Yet, as business owners, they just manage the financial health of their practice just as carefully as patient care. Now, accounting missteps without whether choosing the wrong accounting method, hiring an ill fitting accountant, or navigating complex insurance reimbursements, or making costly equipment investments can really make or break a growing practice. So, even minor bookkeeping errors can snowball into some serious financial crisis. So, today we're diving into the most common accounting pitfalls that dental practices face and the strategies top performing practices use to stay financially strong across USA. My name is Simran, and my company, Confido Health, an AI powered automation company streamlining dental and healthcare admin tasks with 24/7 multilingual voice AI. And joining me are Nishant Pandit from Built Easy, a dental practice management expert firm, and Harsh from Remedo, a dental marketing expert. And we're thrilled to welcome Stephen Nance, a CPA and Vice President at Drill Down Solutions, a dental specific accounting firm serving over 100 small to mid sized practices across the United States. Stephen will share key financial mistakes he has seen in the industry and what the more successful practices are doing differently. So, Stephen, thanks for joining us. Could you start by sharing a bit about your background and what led you to specialize as a CPA and tax specialist specifically in the dental industry in the US?
Yeah, and first of all, thank you for having me on your podcast. It's good to be with you, Simran and Harsh and Nishant. So my background, how I first became a CPA was a little bit by accident or not fully on purpose. What I was originally planning for my career was to go to law school. And I was planning on that, and I saw accounting as a way into law school. And my dad was an accountant, so I had some exposure there, but I kind of saw it as a backup plan. Most people going into law school will major in political science or English, and I wanted to stand out. And so I majored in accounting, and then I got married. And my wife and I talked because I was graduating, and it was time to decide, okay, do we make the move to law school, or do I get a master's in accounting and go the CPA route? And we wanted to start a family. We have 4 kids, and we decided, law school is going to be 3 years plus a much bigger financial commitment. I could knock the master's of accounting out in a year and then another year getting my CPA. And we decided to go that route. And honestly, it's been a very good decision to work as a CPA. How I got into dental, so I joined this firm about 11 years ago. And I came from the Utah State Tax Commission. I was an auditor. So I was on the compliance side, and I started working with various small business. We work with dental and other businesses. And at that time we weren't focused specifically on the dental. So, but we did have a fair amount of dental clients I worked with. And one thing I noticed from the get-go is dentists have the opportunity to make a lot of money and have a really great work-life balance. And of all the other industries that I had worked with, I don't know of another profession that can have such a great balance between the two. But then I also realized over some time that the amount of debt that dentists have is it causes a lot of problems and can make life very stressful. And a lot of times the income that you see on paper is not what they're actually living off of, like you and me, because they've got tons of debt coming out of school. Then they have practice acquisition debt and equipment debt and the normal debt that we all have for our cars and our homes. And that can make things very stressful. And it's not as easy to make a good living and have a good work-life balance as it is or as it seems. Um, so so dentistry has some really cool opportunities that are unique, but also some really unique challenges. And so
Wow,
that's
that's
how I
very
got. Sorry, were you going to say something, Harsh?
no, please
That's
go.
how I first started with dentistry. But then, as we had a lot of dental clients, and when I first started, the founders of our firm had already created this spin-off company that initially started as a dental consulting company, and then evolved into some analytics and dashboards, and that became Dental Intelligence. So Dental Intelligence was born from our firm, and I was working alongside them when it first started. Then they spun off. A few years later, we were still doing our general CPA thing, and we got involved with an accounting consulting group, and we realized we needed a niche, and dental was the natural fit. And I had already liked working with dentists, and it's been really great to go all in the dental world and keep learning. There's so much to keep learning. So it's a fun industry to be in.
Wow,
Awesome.
that's that's so interesting. Um, Stephen, so basically we get the background. Can you for the viewers who are listening to it, whether they could be new dentists, they could be people who are already running their practices. Um, what would be interesting for them to know is what all does a CPA really does when they go inside, let's say, a dental practice, when you're consulting a dental practice. What are the things that you would look at, and what are the pieces that you would be helping them with?
Yep, great question. So first of all, on the bookkeeping side, what we do is, and every bookkeeper will provide a monthly balance sheet and profit and loss statement. But what we also do, since we focus on dental, is we provide a benchmark report as part of those monthly financial statements. It looks at your hygiene, your other payroll, and supplies and marketing, and looks at your EBITDA. That's the hot topic that people just want to have eyes on. And it makes the financial statements useful, so you can manage your practice and know where you're at. The As far as what stands out from the successful dental practices, they watch the numbers,
Right.
and having clear eyes on it is very helpful. So that's what we do on the bookkeeping side. And then on the tax planning side, we typically a couple times a year throughout the year, we will proactively schedule meetings, sit down with our clients, and look at, here's your income year to date, here's where you're trending, and based off of our projection, this is how much tax you're going to owe, and talk through those to make sure we're looking at the right numbers. And then from there, we customize strategies to ultimately help put our clients in the best financial position possible. There's a lot of different tax strategies out there. Not all of them are good, but there are a lot of them that just people don't know about. And it really takes getting into the numbers and looking at where you're at to see what kind of solutions are a possibility for you. It's not necessarily, tax planning is not necessarily a one size fits all. There are different solutions for different types of things and different risk appetites and things like that. So it's a very personal service, and people have different takeaways. The biggest thing is knowing ahead of time, what to expect and avoiding surprises.
Right. I have two following questions based on what you just mentioned because that was really helpful. You mentioned bookkeeping. So, I'm sure like people know that term and they know that okay, an accountant, maintains P&L. But according to you, for a specific to dental practice, what does an accurate bookkeeping method looks like? Because there's also, I was reading up around like, accounting in dental. They do suggest, at least research that I did suggested that accrual is better off than cash accounting. So could you kind of enhance a bit just so the viewers can understand what that is.
Yeah, that's a great topic to talk about. So what accrual is versus cash accounting is cash accounting, money comes in, it's income. Money goes out, it's an expense. Pretty simple. Accrual is when you've got production, even if you haven't gotten paid on that production, it's income already. And so you book that income and you book your accounts receivable. And same thing on the going out side of things. You've got expenses that you haven't necessarily paid yet, but you've incurred those expenses. You book the accounts payable, you book the expense. So accrual does give a more accurate overall picture of what's going on in the practice. However, for tax purposes, most people want to be on cash because most people don't want to pay taxes on income they haven't received yet. So cash is typically what we use for our tax planning. Plus, from a bookkeeping side of things, cash is pretty standard for a smaller outfit, a one or two or even 5 or 10 dental practices. Once you get into a big DSO group, then maybe accrual is a better use. And once you get to 25 million of gross revenue, then the IRS requires accrual. But for the most part, cash is pretty standard, even though it doesn't tell you everything. It's better for taxes and just simpler and for most dental practices, I don't think you need to go beyond that.
Right. That's a great answer. And generally, the famous term what CPAs use is like cash is king. So that pretty
Yeah.
much answers the question. But yep,
Yeah, there you go.
Also, I have a follow-up question to that. Does it like, I mean, I've heard stories from like dentists. What is a good time to be working with the CPA? A lot of times, what has happened with our clients is that, okay, now I have already opened up an office, I need a CPA, or I have a problem, I need a CPA.
Yep.
I have payroll problems, I need a CPA. But what I've seen with some of our dental clients is that the ones who've used a CPA even before acquiring an office, they have benefited a lot. But what do you think? What makes sense? When should dental dentists should start looking for a CPA?
Yeah, and I have heard people say to me that they would tell people starting up a business to get a good CPA right at the beginning. Now I mean definitely when you're in dental school, you know you're somewhat cash poor,
Right.
and so of course you got to watch your expenses. I'm an accountant, so I I do the same thing. But when you're going into starting a business, you want to the more you can have done or prepared for in advance, you're going to be better off. So if you know kind of who your players are going to be, what accountants you want to work with, you know what your financial advisor might look like, have your team, your dental attorneys and things like that, or attorney. You don't need multiple attorneys, but and
Hopefully
also
not.
yeah, one is enough. And know how you want to structure your business, know why you want to structure it a certain way. Having talked to those people before, we can advise you on how best to structure that, and also how you want to operate your business. Because you're in dental school, you're learning clinical and you're getting good skills, but they don't teach you how to run a business. So you've got to start talking to people and having a game plan. Because once you are ready to buy or start a dental practice, there's just so many other things that you've got to be busy doing. Going and running and grabbing all these people and figuring out your game plan just adds to the stress. So the more you can do ahead of time, the better. I'll tell you an example too. In 2019, 6 years ago, we started working with an established pediatric dentist, still a great client of ours. We implemented some strategies that year that saved him about $150,000 in taxes. And not only that, when that saved him $150,000 in taxes, that reduced the required quarterly estimates he had to pay for the next year by about 150,000. So if you think about how that benefit compounds, even if he didn't do any strategies the next year, he had a year longer with his money to do whatever he wanted with it. And he ended up doing more tax strategies, and that compounded and built his wealth, and he's done similar strategies ever since then. And he was already a successful pediatric dentist. And I don't think his accounting firm that he was working with before did anything wrong by any means. But we exposed him to just some strategies he wasn't aware of before. And for all those years, had he been doing similar strategies, the multiple effect of that compounding savings ends up having a huge impact on someone's overall wealth.
Right.
So what are the key financial metrics that essentially you would want, let's say, a dental practice to look at? Or what are the things that you would want to say that these are the top three metrics or five metrics that I would look at if I am a dentist and I'm looking at the practice's overall health?
Yeah, great question. So one, what I would probably say cash flow and net income, and knowing the difference between the two. Oftentimes we see net income positive and cash flow either less than net income or in the negative sometimes. And cash flow, to Nishant's point, cash is king. So you got to know where your money is going. And knowing the difference, how much your debt is costing you, how much your distributions you're paying yourself are costing you. And so understanding that is one. Payroll is huge, your hygiene or staff payroll, just understanding that metric, and it should be below 30%. People have struggled with that since COVID. But that's, ideally 25%. But watching the payroll, because that could certainly get out of hand, and not just watching it from a reducing it as much as possible point, but also kind of understanding how your team is feeling. So that goes beyond the metric a little bit. And sorry for tangenting a little bit, but just having a sense and a feel for your overall practice culture and how happy your team members are. And it takes more to keep them happy nowadays than it did 10 years ago. So keeping them happy, and some of that is with pay, some of that might be with benefits, but some of that is just how much you show that you care about them, right? And having a personal relationship with your team. And then watching your top line, revenue or collections or production, both, but collections obviously is what actually hits your account. So watching that, but the difference between collection and production, but also just making sure that it's growing.
Yeah.
And that's what I would probably say is some basic metrics to start with.
So that actually brings to an interesting point. So when you were giving these numbers, right? So I felt that there are some benchmarking that you've already done across the industry in terms of how should the overall structure really look like, right? So what should be the percentage of payroll? What should be the percentage of probably the other overheads? Can you just give us like some indicators on how successful practices matrix looks like on some of these numbers in terms of, again, percentages, and then let's say what you would suggest for, what could practices do in order to match this number and bring their practice up to that level?
Yeah. So a successful practice keeps all their payroll at 25% or below. We're talking ideal, and runs a profitability at 50% or higher. So that means their overall overhead are 50% or less. That's a really good practice. And I've seen some that are 60% profitability or higher.
Ah,
That's that's not necessarily common, but that's a really good practice. But I've seen practices that are, you know, nowhere close to that. I think probably more averages, profitability is probably closer to 30 or 40%. And so that means their overhead is, 60 to 70%. And that's probably a pretty normal practice. And again, I've seen some that are losing money. So it's hard to take these industry norms and say that that's
right.
what your practice should do. What I would say is monitor your improvements
Mm,
from month to month and from year to year, and keep goals and keep focused and drill down. No pun intended. Drill down to see what the issues are, and you can use a coach, or you can use something like Dental Intel or analytics
Right.
to see what the issues are when you've got a benchmark that is out of whack, and just make sure you're monitoring for improvement on a regular basis.
Yeah, you mentioned staffing, which is very interesting because I did have a question on that. So, on a personal note, like, of course, we also work on kind of, reducing that kind of the staffing issue that is such a prevalent, challenge in the dental industry today. There's, either shortage or there's burnout. And, our research has shown that staffing inefficiencies and unnecessary manual tasks can significantly impact a practice's revenue cycle. So, from
Yeah.
an accounting perspective, have you observed some similar trends? Like, do these challenges show up in the financials as you analyze as well?
Yeah, definitely. You look at practices that you look and see they're not making very much money. Where is it all going? And usually it's payroll. That's just such a big one that just gets out of hand, and it's a very tough one to manage because you need your people to bring in the revenue, but you've got to manage it appropriately, and those percentages should provide that roadmap. Because if you're not profitable on your hygiene, or your associate, what's the financial benefit of having that, right? So monitoring those or looking at those benchmark percentages is a good way to monitor and start looking at what those issues are. But you know, sometimes you got to make some difficult decisions as a business owner. We've
Sorry.
had to let people go in our accounting firm before, and it's tough to do, especially when they're not obstinate, terrible employees, but they're just not keeping up with what you need for your business to be successful. And at the end of the day, you've got to remember that you're running a business, and some people are just too nice, and not that you shouldn't be nice, but you've just got to monitor the numbers and make sure that you're doing what you're doing intentionally.
Is there like an ROI metrics or something that, there's like an investment in this amount, like in the payroll, then this amount of, patient volume you should be getting in terms of income to actually offset it to show that profit?
Oh, that's a good question. I mean, payroll should be around 30%. But I mean, there's different divisions of that, and we show hygiene and associate doctor staff wages. But it also takes time, depending on what metric you're looking at. Certainly with an associate, it takes a while before you see profitability from an associate. Um, and same thing with hygiene.
right.
And and it's tough to measure, the profitability of your staff wages. But again, looking at the percentages and things kind of come into play there. But another thing is just making sure that, if you hire an associate, making sure that you're hiring an associate at the right time. Because if you're just going off of some arbitrary reason for bringing on an associate because you want to, because you've hit a certain collections number or something like that, you really do need to look at things like what's your schedule look like, and how fast are you booking appointments, and how much is your schedule filling up to where you could bring an associate on and not lose money by taking from patients that you're already serving, but to bring on new clients. And so looking at that helps you be able to monitor those types of investments.
Great point. I
So,
mean, right, when we were like when we talk to our clients, right? I mean, that's what we talk about, right? There are two different sets of clients. One who is talking about profitability, the other one who is talking about revenue. I mean, both those answers are correct, the way you want to look at it. But with that being said, there's a very popular term. I mean, not popular for you, it's very common for you, but a very popular term in dentistry, which is going around since like last 4 or 5 years, where everyone is talking about EBITDA, right?
Mm-hmm.
Now everyone has their own definitions. Oh, it's earnings before interest and amortization, everything. If you can just give a basic understanding to our viewers, like what is EBITDA? Because everyone, when they hear this term, they're like, oh, DSOs are tracking what their EBITDA is because they want to sell it at whatever multiple, right? But like, if you can just explain what that EBITDA is, and should they be looking at it from the first practice itself?
Yeah, great question. So simply put, EBITDA is, like you said, it's earnings before interest, taxes, depreciation, and amortization. So if you look at a profit and loss statement, bottom line is your net income. So that's all your revenue minus all your expenses.
Mm-hmm.
And if you start with the net income, you add back your interest expenses, your tax expense, if you have any. Most dental practices in the US are either taxed as an S corporation or a pass-through entity where they're not paying income tax at the entity level.
Right.
Unless there's some state taxes. Then you add those back, and you also add the depreciation and amortization, and that's your EBITDA. And the reason that's put there is as a metric is that gives a reflection of how much you earned that's actual more stable income. Depreciation and amortization are not cash expenses for one, and they may change from year to year if you're taking Section 179 and things like that.
Right.
That is EBITDA. And now most DSO buyers are going to modify that EBITDA number slightly, and they're going to have other add backs that you mentioned. They're going to adjust how much you're deducting for your officer wage. If you're not paying yourself a high enough wage, they're going to reduce your EBITDA for what they would have to pay someone else to fill your job, or pay you if you're going to step into the shoes as an associate. And they're also going to take out things like your auto expenses. If you have a business vehicle that you choose to have in the business, you don't have to have a business vehicle. A lot of times you do that for tax reasons or things like that. Or you're choosing some CE courses that maybe are more extravagant than you would, things that are more your choice. Those things that they add those back, and so that might increase your EBITDA number or add to it. So those are kind of the things that they look at. But yeah, you should understand your EBITDA, because that's what most valuations are based off of now with a DSO transaction.